Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It has just gone 10 AM on Sunday the 28th of March 2021 and we're going to spend the next few minutes looking at silver using the SLV ETF. Right, we're going to do our basic analysis first, as we always do on this channel, and our Elliott wave analysis second. But in case you're new to the channel, let's give you a quick rundown of the chart. We have our Elliott wave count, which is all the numbers and letters you see here. Let's just clear that out of the way. We have 4 exponential moving averages, a 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side here, showing us the various peaks and troughs of the buy-sell volume, with the extreme of which being marked by a yellow dashed line, which is our point of control. We have an RSI set to a 10 close, with a green 30 level representing oversold conditions and the red 70 level representing overbought conditions. We have a MACD with a 10 for the short term moving average, 20 for the long, and a 9 to smooth. Right then, so what can we see here on the weekly time frame on the arithmetic scale so far? Well, another red bar below the 20 exponential moving average. Another red candle below the 20 exponential moving average. So we've done this, we've closed the body of the candle below the 20 this of the week of the 22nd last week. We've done it on the week of the 1st of March and we've done it on the week of the 23rd of November, but we've only done it 3 times. The rest of the time we've managed to get the close of the body of the candle above that exponential moving average. So this is the 3rd time we've invalidated that level. Now, given our Elliott wave count, which we'll talk about in a minute, this is a more bearish signal in the context of a 3 wave move lower, because the first move down was the first corrective wave and we were bound to bounce into 3 waves since. So the invalidation on the week of the 23rd of November turned out to simply be the first of 3 waves down, as I suspect. And the next break of it was the first thrust down from the high before a rebound before further move lower. So given the sequence of events, I consider this to be more of a sell signal. We haven't had a crossover of the 10 over the 20 exponential moving average in a weekly time frame yet. We haven't broken down violently yet. So too early to really commit, but looking more fragile. And I expect this market to break down, and I'm bearish in the short term. Bullish in the long term, love silver, but I'm bearish in the short term. Now the RSI is still neutral between 40 and 60, high to lower high, and we've had high and higher high in price. So we have got a bearish divergence between these 2 highs on the weekly time frame, which is bearish and it should suggest the price will break down. MACD, slight acceleration of bearish momentum here on the week for the weekly close of the bar here for the week of the 22nd of March. Short-term moving average accelerating away from the long-term moving average, more bearish pressure building up, suggesting we are ready to break to the downside finally. I say finally because we've been up here for a bloody long time. Since the initial high of this double topping pattern before the major high, we've essentially been up here trading in this range for 32 bars, which is 224 days, 32 weeks, long time. Yes, it's been volatile, big up and big down, but we've essentially gone nowhere in this whole time, just gone sideways. So time for a nice break one way or the other, please. If I'm wrong and we break higher violently, what to do? I own silver, I own the SLV, I own other ETFs, I own silver miners, silver stocks, and I own physical silver, so it's all good. But I actually wanted to break down more in the meantime, from a perspective, not from a trading it perspective, but for long-term accumulation of the metal. I want to see this break down, and I think there's evidence to suggest it will. Let's come down to the daily time frame. So on the daily time frame, we spent the week essentially pushing keeping below the 10, 20 and 60 exponential moving averages on the daily time frame, closing the week with a 10 and 20 cross of the 60 with the price below it. Now this is called the death cross, we know that, but we don't pay too much attention to it on this channel because it's all relative to where you are in the count. For example, look at all this range here. Okay, we had this entanglement of moving averages. We had the 10 and the 20 below the 60 a couple of times here, and yet the price did not collapse, right? Because we were not in the right part of the wave structure to collapse. So if you'd been betting on the death cross here as a major sell signal, you would have been wrong, because we then came back up. So this is an A wave, this is a B wave, now we've got a C wave. However, to have the death cross occur in our suspected, assuming we're right, in our suspected C wave is a sell signal. So I think that's more support for the bearish case. There is a minor bullish divergence in the short term between the 8th of March and the low on the 24th or 23rd of March, but that can easily disappear with a thrust down into oversold conditions. But it is there, so maybe we're going to pop back up. Maybe. I'm not leaning that way myself. We do seem to just be shrugging off a bit of that bearish momentum near the end of the week here, with a slightly, lighter coloured bar on the histogram. But it could just be a mini wave or minuet wave movement back up before coming down lower. Right then, so that's really it. We're still above the 250 exponential moving average on the daily time frame. A break below that level would coincide with breaking the low at 2044, and then I think it's bears all day from there. So we haven't done that yet though, and of course we haven't really had that substantial breakdown on the weekly time frame either. So let's bring up our count and let's explain in the simplest terms what I think we're looking at here. Let's go full screen. So all I'm looking for is this, a free wave move, right? Whether it comes down to the previous low, whether it stops just before it, or whether it comes all the way down here, I'm good. Lower pricing, please. The completion of a free wave move that we can count, please, and then we can finally get moving. Right, so why have I got the target down so low here? Well, first of all, we've got this really nice area of volume here, and it coincides really nicely, very, very, very neatly. If we come up to our proposed one, we're talking about an expanding flat pattern. This is why this height is higher than the top of our wave one. Right here in the yellow zone at 61.8, it's $17. Spot 08, 60 and 16 spot 56. Between these two levels, 61.8 and the 65, we're right in this area of volume here. This would be a deep wave 2 retracement, expanding flat pattern. We also have the wave A extension to here with our proposed C bringing us to the 1618. I'm not sure if you can see it because it literally sits right on top of it. Let's just delete that out of the way. Here's a 1.618, sits straight in the same area as 17 spot 11, literally in the exact same area, right on the 61.8. That would be so bloody wonderful for long-term accumulation. If we could just come down here, that'd be great. We've got the 61.8 down here. We've got this 1.1618 extension of the wave A. Right, so that's me being uber bearish in the short term. Let's talk about the possibility of this being a running flat. Okay, so we've got a higher high. We've completed our wave 1, but then we've come down lower and then higher than the wave 1, meaning that we've got an expanding correction. So if we're not coming down deep in an expanding flat, then we could be just running sideways in a running flat, in which case we don't have to come down anywhere near as deep. We can come down the length of the A projected from the B and look at our fib targets. We've gone through the 61.8 and the 65. We're hanging around the 707, which has no significance as an extension level in this expanding pattern. The 61 does, but it doesn't seem to have held. In that case, the 100% extension would have us finish before where wave A concluded. I see no supporting evidence for that at the moment. I mean, there's volume around the 78.6 here, so maybe we can find support here. But does the wave structure support it? We've gone 1, 2, and then we've gone 1, 2, 1, 2. That's what it looks like to me. So unless accounting, no, it's an expanding pattern. It's that simple. Unless you're shifting the whole count across to here, I like this count. So A, B, C. So if we are going to finish it, we don't have to come all the way down to that 1618 extension of 61.8% retracement of wave 1. But if we don't, I think 100% extension is your only real bet. I mean, it could finish earlier, but the wave count I've got just doesn't support it, so I don't like it. I'm not saying it's not possible, but I just don't think the probability is there. So you're looking for support at 21 spot 18. If we break down this week, you're looking for support on this white line here, and you're looking for support from a 250-day exponential moving average. If you don't get it, or if we bounce and then fall further, then I think the deeper correction is on the cards. And the next big support level is down here at 1618, which is $16.98. So could find support at the 123.6, 19 spot 5, but there's just a huge gulf in the volume here. Just a huge gulf in the volume profile. There's untested market price down here. There's no acceptance of this. We can see why. We've got gaps to fill. I mean, big time styly gaps. Let me just show you. So When we broke up in this wave 3 here, intermediate wave 3, we left a huge gap in the chart here. Yeah, we left another gap in the chart here, and neither have been filled. We've come back to the top of it, but we haven't filled it. So I'd want to see both of these get filled on the way down anyway, correct some of the damage done to the chart. But how far we come down depends on just how deep this correction is. I mean, you've got gaps down here where we initially broke up. So, like I said before, gaps don't always have to get filled. But there is evidence to suggest that this area, given the volume profile, is an area of untested price, lack of market acceptance in this area. So maybe we just want to come down into this and find if there's any support here. We want to come down and look for buyers. We might find them in this untested area, or we might have to come down to an established area of buy-sell volume in the profile here to find some support, supported by the extension of the wave A from the B, supported by the 61.8% retracement of the wave 1. Okay, like I said, could stop sooner. I'm betting on lower. That's it, guys. That's all I've got to say for SLV. So if you're new to the channel and you've liked what you've seen, please subscribe, smash the like button, let us know what you think in the comment section below if you want to. Feel free to share these videos and hit the little bell notification icon to remain informed of future video releases. Alright guys, take care, all the best, be back with you soon.